And now, it's Boomer Life, lifestyle discussion designed to make your life more engaging, meaningful, and complete. Celebrating the baby boomer generation, this is Boomer Life on Sea Isle 650.
About a greenback dollar, spend them fast as you can.
Welcome to Boomer Life on Sea Isle 650. I'm Joanne Sutton, and today we're talking about your financial future with Jim Doyle, Senior Financial Consultant with Investors Group Financial Services, Inc. Now, Jim, you hold the CFP, Certified Financial Planner designation. You also hold additional designations as a Chartered Life Underwriter, a registered trust and estate practitioner, a certified divorce financial analyst, as well as a certified international wealth manager. Jim Doyle is a graduate of the UBC Sauder School of Business Family Enterprise Advisor Program. And there's a little something different for today's show before we carry on, something special for our listeners as well. I wanted to extend an opportunity to have a chance to meet Jim. Jim is going to be on location at Van Dusen Botanical Gardens Wednesday, October 7th. It's all part of the Tapestry Foundation's Seniors Lifestyle Tapestry Talks, and it runs from 10 until 4 p.m. So mark that on your calendar. So, Jim, thanks for joining us today, and thanks for sharing that opportunity with our listeners.
Thanks, Joanne.
Now, what a show we've got planned for today. This is jam-packed, action-packed. Now, given the recent market setbacks, today we're going to be looking a little bit at going back to all the financial basics. Do you have a financial plan? Do you want to know which elements are essential when it comes to designing your ideal financial plan? We're going to be covering all of this toward the end of today's show. We're also going to be looking at some back-to-school education planning, the various RESPs, the Registered Education Savings Plans that are available to you. And did you even know that there was more than one kind? I didn't, as well as some other talking points for discussions that you might want to have with your kids before they get their first credit card or student loan funds. We're going to talk about money with your children. Well, with you, about your children. We're also going to be exploring the potential financial pitfalls that the sandwich generation faces when it comes to helping kids, helping aging parents and loved ones all at the same time. So there's a lot of information packed in today's hour, but let's start our show by talking about just your basic investment behavior. With the markets the way that they are, you've probably been getting a couple of calls from clients, Jim, looking to see if they should be doing anything differently. I know it's crossed my mind over the last couple of weeks, so can we start here?
Well, actually, I've had relatively few calls about the volatility. I've actually had more calls about, people wanting to ask when to buy in or add back to their portfolios.
Oh, for a lot of our listeners, I think the events of the past couple of weeks are starting to have a sizable impact on their investment portfolios. Now, during these turbulent times, or what are deemed turbulent for some, what type of advice can you offer?
Emotions have a big hand in influencing investment decisions. It's so important to remember that how we manage emotions at times like these is going to have a significant impact on how we fare financially long term. My advice would be speak with your advisor, stick to your plan, and remember that these storms generally pass.
Emotions. Yet again, if there's anything that I've been hearing over the past several shows, is the role that emotions play in terms of how we make our investment decisions. Without keeping them in check, they probably wield more power than they should. So I definitely agree that times like the recent downturn speak to the importance of working with an advisor to help keep you on track to making better decisions.
One of the unpleasant outcomes of the sizable market downturn in 2008 that doesn't get mentioned very often is that in an effort to get out of what people perceived as riskier stocks, to limit further losses, investors went into what they thought were safe bonds. Unfortunately, interest rates started to rise and people lost money. We have an interesting dynamic today where interest rates, which are already incredibly low, are probably going to start rising at some point. This will certainly influence bonds.
So what does this influence on interest rates mean for our listeners?
We speak to investors all the time who are surprised that you can lose money on bonds when interest rates rise or inflation rears its head. Now that volatility is here, you need a strategy. The first thing I want to suggest is just because markets are volatile doesn't mean you need to abandon a sound financial plan. One of the biggest mistakes people made in 2008 was selling and making losses permanent. Human nature being what it is, people are fearful of false starts. They don't want to buy something, see it fall, and feel that they've made a mistake. It's not uncommon then when any recovery starts, there can be an occasional false start. Just look at what happened in 2008. The first quarter of 2009, markets dipped, retesting 2008 lows, and people felt justified saying, "See, I told you it was going to go down further."
So why do these false starts that you mentioned actually create a problem for long-term investors?
You know, it seems so simple on the surface. Buy low, sell high, yet we do the exact opposite in periods of market volatility, abandoning sound planning in favor of short-term or market timing perspectives. What we see investors doing in an effort to protect their money is abandoning their long-term perspectives. This is unfortunate, as they could be forgetting what it is that their long-term perspectives did for them in the first place, and that contributes significantly to their growth.
It can be so difficult to hold steady in down markets. I think I speak to the feelings of a lot of listeners when I say that in that moment we feel like completely helpless and we feel we must do something.
Well, that's the problem. Timing the market rarely works. In fact, I think that could be one of the biggest risks today. I've been doing this for over 25 years, and I can't tell you where the markets are going today, tomorrow, next week. What I can say is that sometimes investors tend to be their own worst enemies when they look to sell quality investments at the wrong time and are reluctant to buy when the best opportunities present themselves.
Jim, you raise a lot of great points here. Aside from your own counsel, are there any other market mentors whose sage advice that you recommend in troubling markets like these?
Absolutely. You know, anybody that's familiar with Berkshire Hathaway, Warren Buffett, Charlie Munger, I love Mr. Buffett's perspective, which I think is worth borrowing from time to time. It's about buying investments with an eye to holding them forever and never selling. Just look at his love for Coca-Cola. You know, it's an interesting perspective. Do you currently hold any types of investments in your portfolio that you want to hold on to forever? If you don't, you might want to ask yourself why or why not. It could be a good time to revisit your overall investment philosophy.
Jim, I'm certain you've seen a few of these cycles over your 25 years working with investors. What do you feel are some of the keys necessary to achieving long-term success?
Joanne, I like to tell investors, if you can learn something from a market event, it may serve you well in the future. If you sold in 2008, history has since shown us that, for most investors, this was the wrong thing to do. Turbulent times like these can provide exceptional insights into yourself, your investment or behaviors, your pattern behaviors, and also look at your investment DNA. How you make your investment choices, how do you take advice, and what are the drivers of your decisions?
If only we could have a do-over or a second chance when it comes to certain investment choices.
When I was learning to dive and get certified a number of years ago, they taught me that, if you have your mat kicked off, don't rush to the surface. So, of course, what happens? I get my mask kicked off, and instinctively, I start heading for the surface. Just then, there was a quick grab and release on my calf to stop me. Okay, it reminded me of the training, and I was able to react accordingly. That quick grab and release probably saved me from doing something unwise.
So how do you think this analogy could actually help our listeners?
It seems simple, but the message is very powerful. At times of market turbulence, it can really help to hear from your advisor. Our job is to provide reassurance, to let you know that you're in the right investment, that your plan is solid, or to let you know that there are certain adjustments you may need to make.
So no quick reactions. Don't run is what I'm hearing. When we're feeling scared or unsure, reassurance is usually all we need to stay the course and continue on our path to success.
Joanne, I've said this before, and I'd like to say it again. I'm a financial planner at heart. I believe your investment selection should be driven in large part by what your needs are, and I believe that my role is to help with investment selections that not only meet this requirement, but fit within your risk tolerance and expectations. Remember, your financial plan should drive your investment selections.
Your financial plan should drive your investment selections. It's perfect words coming from a proud financial planner. Could you share with our listeners a little bit more about why having a financial plan is basically the cornerstone of your practice?
I can't emphasize this enough. If you don't have a written financial plan, it can be difficult to assess your needs, both today and in the future, and on an ongoing basis. Now, no one investment style works for everyone, and no one investment strategy is built to be reviewed once and then left to self-regulate. Investing strategies and financial planning must be continually reviewed in order to achieve the best results and the long-term success.
Makes sense to me. You make it sound so simple.
When it comes to planning, some people want no advice, others want lots. Personally, in my practice, I enjoy working with financially comfortable Canadians who want and follow advice. The following of the advice is the important part. Joanne, let me tell you, when markets are going well, people often tell me that they're okay with volatility. However, when volatility surfaces and we get a chance to see the true test of a person's risk tolerance.
So, Jim, how does this risk tolerance actually tie into the value of working with a financial plan?
It ties into confidence. Being confident in your investment choices involves having a solid understanding of what level of risk you are willing to take in order to secure a certain outcome. Your financial plan drives your investment selection because it allows you to feel confident that you've modeled the different outcomes that you could achieve before making the changes that could affect or significantly affect your portfolio. With the recent market volatility, if you're discovering that your risk tolerance is lower than you anticipated, maybe now is a good time to see if you can accomplish your financial goals with a lower level of risk, with the understanding that it's a trade-off. You can take less risk, but you might also get lower returns.
Well, I have to say that I actually feel like with every show where we've had this discussion, we've all been learning a little bit more about risk and volatility, and you've given us some great examples as well. You are listening to Boomer Life on CL 650. I'm Joanne Sutton. Today we're speaking with Jim Doyle. Jim is a senior financial consultant with the Investors Group. We have an exciting announcement to share with our listeners today. Jim is actually going to be on location at the Van Dusen Botanical Gardens Wednesday, October 7th, so you'll have a chance to meet him. It's all part of the Tapestry Foundation's Tapestry Talks, and it runs from 10 a.m. until 4 p.m. You can mark it on your calendars. And do make a point to drop by and say hi. Bring a question with you, of course, for Jim to answer. If you're not able to make it out to Van Dusen Botanical Gardens on October 7th to meet Jim, you can learn more about him online, or you can give him a phone call and find out more how Jim Doyle can actually help with your financial situation. So here's his numbers, 1-800-665-7178, or direct at 604-682-5431. Of course, there's still a lot more to come after the break. Jim is going to share some insights as to what not to do in turbulent markets, as well as some proactive planning tips to make the market downturn work in your favor. That's all coming up next on Boomer Life on CL 650.
Celebrating the baby boomer lifestyle. This is Boomer Life on CL 650.